Welcome back to the Building Your Life podcast. My name is Doug Sandler, along with the real host of the show, John Browning. John, welcome back to another exciting episode.
All right, thanks, and glad to have you here with me as well.
I was going to call you a superhero, but I didn't see your cape today. You normally, are you a red or a blue cape wearer?
I definitely like the blue cape wearer. Yeah.
I haven't seen the big JB on your chest, the big moniker there, but we'll work on that for future episodes, and we'll see you on the YouTube channel as well.
All right. Sounds good.
Hey, if you're tuning in today, make sure you get a copy of John's book. It's free for you. It's called Build a Life, Not Just a Portfolio. Or to connect with John directly, just head over to his website, guardianrockwealth.com, or you can text the word life to 321-421-5213. John, all right, let's get into it today. Today, I know we're talking about an exciting subject for those that are interested in including or not including insurance as a part of their financial plan. I know we all have opinions on this stuff. So you ready to get into the topic today?
Let's do it.
All right, so let's chat about it. So I guess the age-old question, should insurance or should not insurance be included as a part of your financial plan? You say what, Mr. John?
I say that insurance is, I rarely say this. I always hesitate before I say it, but I'm going to say it. Always part of a good, solid financial plan.
All right. So now we got to build the case around why it is a good part of your financial plan. Is it generally people don't even like talking about insurance? It's a challenging subject because they're dealing with mortality. You know, everybody that is planning on at some point dying, nobody actually thinks they're ever going to die. But those that understand and have gripped the reality that we need to leave behind a little bit of a financial legacy, either for our spouse or our kids or grandkids or anybody else in our life. Tell me a little bit more about why it should be, and is there a best time to buy something like insurance?
Well, if you don't have it right away,
okay,
for most people, and it's not just life insurance, right? It's your car insurance, and you can get the state minimum, right? But there's a reason why there's a state minimum, because left to their own devices, people wouldn't get it, and often wouldn't get it because they don't understand the value, and they don't understand this whole thing where I have to pay for this thing every month. And I don't see anything. Well, until you have an event, and then it becomes a very important part of your financial plan. Now we'll focus. I talk to people about their car insurance because here's the thing: when you're a hammer, everything looks like a nail.
Right.
So if you're just talking with an insurance agent, sorry to all those insurance agents out there, oftentimes they want to overinsure you, right? Because that's how they get paid. So one of the advantages, as I mentioned before, is I get paid the same amount. I don't have any incentive to sell you anything. I get paid the same. So sometimes I actually get paid less if I suggest you get insurance, right? Because that's not assets under management. So the reason that I think it's important to have a financial advisor who also does comprehensive and, financial advice is because they should be looking at your insurance picture as well. Even your car insurance, your home insurance, and everything else. But generally we focus on life insurance. And I had a conversation with one of my clients recently where I brought it up. They're younger. They feel like they're going to live forever. There's a song about that too, I think, right? Who sings that one?
Well, there's a Rod Stewart, Forever Young, but I don't know if that's the one you're referring to.
No. I'm going to live forever, right?
Wow. Hey, wait a minute. You had a little vibrato in there, John. 30 years as a DJ. That was actually pretty good. This is why I have a face for radio and you have a voice to become a financial planner.
There we go. So, when you're young, you just feel like that, right? It's like mortality is not something you want to talk about. And unfortunately, none of us know that we've got tomorrow, right?
Right.
And, being as ancient as you and I are, our mortality is a little bit more real because we've seen, I'll say, more of our friends and family pass away. And we've seen some of the heartache that can come when they're not really prepared, right? They haven't really thought about it, haven't had those hard conversations. And we spend a lot of time in the financial plan, going through that, not just with life insurance, but also with estate planning and things like that. But with life insurance, this one couple, they were like, well, we don't need to insure my wife. We don't need life insurance for her because she's a stay-at-home mom.
Mm-hmm.
And so I said, well, okay, that's great. I said, that's fantastic. I'm so happy you guys can do that. What do you think it would cost you if something were to happen to your wife to replace all the things that she does? And would you be able to continue working as you do if she wasn't around?
It's a great question, and it is one of those things that people just they miss. It's like, hey, you'd have to have daycare, you'd have to have a nanny service, you'd have to have some other additional services. You're not going to be able to work your 40 or 60 hour a week as the solo breadwinner in the family anymore because you have a child that no longer has a parent that's home with the child. So the idea of having someone that, well, she doesn't have a financial value because she's not out there making money is completely wrong. And I love that you say that, because it's exceptional advice to hear, and you've got to hear it if you're listening to this. If you're not making money, that doesn't mean that you don't have a financial value worthy of insuring.
Right. And then we started talking about him, and he's like, well, I guess just, let's say I'm making this, so insure me up to this. And I was like, but in the event something happens to you, it's never going to be there again. So is your mortgage paid off? Does it need to be paid off? And how many years will your wife need to support herself and the kids?
Mm-hmm.
And what value have you been bringing that you're not getting paid for that she may have to pay for in the future? Let's put all those things together
mm-hmm.
and see what the amount of life insurance that would be appropriate for is. And of course, then you get into, oh my goodness,
of course,
that is too expensive. I can't afford it. And then we start talking about term versus whole versus universal life insurance, and which is super important to understand as well. And the idea that a lot of people has, I'll just buy all term because it's cheaper. I understand that, and maybe that's all that you can afford, and it's better to have that than nothing. But consider this: you're renting that.
Right. And it's usually for a finite period of time, for let's say a 20-year period of time, and somebody buying term life insurance at, let's say, 30 for a 20-year level term is going to only take them to 50. And then the rates could go way higher than where they were for that 20-year level term. You're only renting it.
You're only renting it. And frankly, you may become, and I've seen this a lot, you may become just simply uninsurable. Something happens, you get, God forbid, you get cancer, you have some sort of an accident, some other disease, diabetes jacks your rates way up. I mean, things like that. I mean, that stuff happens every single day. And suddenly you either become uninsurable or cost prohibitive to insure. So the idea of, yes, usually there's some sort of combination, because frankly, as you get older, your kids go off on their own. They no longer need that. So maybe a portion of it would be term, but then a portion of it would be whole or universal. And that's permanent insurance. And you can, oftentimes there's a term insurance you can convert over time as well, as maybe you start making more money and it becomes more affordable for you, and that type of thing as well.
There's certain types of insurance, whether it's term or universal or whole life, that would be more advantageous to buy at an earlier age. Whole life, for example, I remember, I think I bought my policy in two policies in 1990, whole life insurance. I've paid them every month for the last 30 some odd years. And I used part of the cash value of the insurance to actually buy a home when I did not think I could purchase a home. And thanks to the wonderful advice from the agent that I was using, he said, hey, you can do this. You can either borrow it or you can take it. It's your money. I didn't even realize it was available to me. So for me, it was a huge windfall of money that I said, I can buy this house that I never thought that I would be able to afford, only because of my insurance. Now that was, some people say it's not a great investment. Don't put money in it as an investment, but it turned out to be an amazing investment for me. Can you share a little bit of your philosophy on that too?
Yeah, for a number of reasons, that whole cash value benefit of universal and whole life can be a huge benefit, right? It can be sort of that rainy day fund. It can be a savings you can use for, frankly, anything.
Mm-hmm.
Where people get in trouble with it is that they borrow that money and they're borrowing it from themselves and they don't pay it back.
Right. Right.
And then suddenly you don't have the amount of life insurance that you thought, right? So it is a good idea to pay it back to
Well,
yourself
it's a
and
it's
to
a
your
it's a
care.
it's a double-edged sword. You're 100% right. We were explained, the differences between the two, and it was one of those things where we had to make some decisions. But you're 100% right. Kind of like anything, you have to weigh the benefits of the policies, whether it's term or whole or universal or any other type of insurance that's out there. Absolutely, got to weigh the benefits.
And you've got that cash value thing, right? So that can be used for anything. If you run into hard times, whatever, you could become unemployed. Well, you can tap into that, and you can even tap into it to pay your premiums in the event that you're unemployed for a while and you don't want it to lapse because you may become uninsurable, right? This is something that people should be more afraid of than they are, is that they become uninsurable as they get older. Frankly, our metabolism slows down and we get a little bit of weight around the middle. That jacks up your rate, right? You're no longer a quote preferred rate because your BMI doesn't work. Although I always joke around that Dwayne Johnson, The Rock, his BMI is probably horrible, but I don't think he's got an ounce of fat on his body, right? I think he's pretty healthy. But those are things all to consider. The other thing I always point out, especially when maybe you're a little bit older and you have kids and you'd really like to go spend their inheritance, but maybe you feel a little bit bad about that. My dad does not, by the way, feel a bit bad about that. He tells me all the time, I'm spending your inheritance, which is fine. But if maybe you do want to leave your kids an inheritance, but you want to spend your money, well, you buy a life insurance policy on yourself, because guess what? Unfortunately, you're going to die.
Right.
So it's going to pay out. So you buy that, they get the money when you pass away tax free, as opposed to getting the money that you had socked away somewhere that they may have to pay taxes on.
All right. Wow, a lot of things to think about. Is there anything related to insurance that you want to make sure that those in our listening audience have the information about? You explained term, whole life, or universal. Now, in between whole life and universal, can you maybe just help us define some of the characteristics of each one of those so we know what the better of the two would be?
Yeah, so universal typically is, both of them are going to be more expensive than term, but universal is going to be more expensive because the premiums tend to be flexible. So you don't necessarily have to pay all of it right now. You can pay some of it later, things like that. You can choose the type of return that you would like. Would you like it indexed to the stock market? Would you like it indexed to US Treasuries, or some mix of the two? On the flip side, whole life, which tends to be even more expensive than universal because there are more guarantees, which is something you don't hear me say very often here on the podcast. But with insurance, it's guaranteed payout on life and also a guaranteed interest rate on that. And you don't get to pick what kind of a return it is. It's going to be fixed income. And
Okay.
the insurance company is going to tell you exactly what that's going to be. And for doing all that and providing all those guarantees, it is more expensive, but it's not going to fluctuate up and down. So if your mentality is, I can't sleep at night because I'm worried about my accounts going up and down, then whole life is probably better for you.
As a part of, we started this episode and we talked about diversification of one's portfolio and life insurance being a part of that. Is there a sound, a bit of information that you could give someone that's out there as it relates to, okay, we know we need insurance. How do we make a decision on what type of insurance to get, and how much is a part of our portfolio the insurance should be?
Yeah, it's so different for individuals and families that it's not something I could tell you here. Of course, this is not investment advice anyway on this podcast, but I would say you definitely want to go at the very least to an insurance agent. Don't try and do the online thing with this, because frankly, it can be very confusing. And even better than that, find a financial advisor who also will work with you on insurance that doesn't necessarily charge a commission for that insurance, or maybe even provides comprehensive investment advice and brings in a team of people like we do.
Mm-hmm.
And one of those people is a qualified insurance agent that is an expert specifically in that field, can explain everything. And then you still have the financial advisor there to act as a bit of a temper on that, to just say, I know everything, the hammer, everything looks like a nail. Insurance agent thinks everything needs to be insured, but the financial advisor can give you a little bit of extra advice there as to what's really necessary, as to what maybe might be a little bit more than you really need.
All right. Well, another great episode, John. Thanks for chatting with us about insurance. Thanks for being here. Thanks for sharing your wisdom again on the podcast.
All right. We'll see you next week.
For those in our community, if you have not yet gotten a copy of John's book, Build a Life, Not Just a Portfolio, or if you want to connect with John, just text the word life, LIFE, to 321-421-5213, or visit John's website at guardianrockwealth.com. See you again next week. Thanks again.